Salesforce shares are getting slammed in the after hours after the company announced their Q1 earnings that missed expectations, also gave Q2 outlook that also came up a little bit short on those expectations. We'll take a look at where those expectations were, talk about the third and fourth quarter since they talked about that on the conference call. We'll go through the financials, and then we'll look at this technically. Can you buy the dip in Salesforce.com? What are some levels that we're looking at and areas where you could potentially get back in or maybe even add to a position that you might already have? What is going on, investors? Hopefully you guys are doing well out there. Salesforce shares, before the 16% drop in the after hours, we're up a solid 24% over the last year, but year to date up just 3%. We're not really seeing a lot of translation between NVIDIA's performance on the GPU side into software quite yet. Salesforce, the quintessential enterprise software company not named Microsoft, just simply cannot deliver results, even though companies seemingly could have a big advantage when it comes to AI. In Q1, revenue came in at $9.13 billion. That was 10.7% growth year over year. The expectations was closer to 10.9. The high-end estimate was for $9.2 billion. So we came underneath the high-end estimate. The low-end estimate was a shade over $1 billion. The midpoint estimate was 9.15. So we missed expectations by about $20 million. But where Wall Street doesn't like is a second quarter miss as well. Revenue expected at Salesforce to be between $9.2 billion up to $9.25 billion. The problem is there. Wall Street was expecting $9.34 billion, or about 8.6% growth. The high-end estimate was $9.55, so well underneath, even if they come towards the high end of their revenue projections. The low end was for $9.2 billion. So Salesforce essentially coming in with their Q2 guide right at the low point at what Wall Street was expecting. And considering they missed their revenue targets in this quarter, doesn't give Wall Street a lot of confidence that they'll be able to come up and above the estimates for the following quarter, given the nature of their business as well, rather predictable from a software subscription basis. And that is why you're seeing shares down over $40 in the after hours, or about 16%. However, I did read through the conference call. Interestingly enough, the company held their full year guidance, which means Q3 and Q4 probably not in question, and in fact could potentially be maybe on the low side of expectations. Considering they came underneath in Q1, they're coming underneath in Q2, but they kept their full year guidance, and in fact they reiterated it when an analyst asked a question about should they bring that guidance down, and they said no, they have confidence that the back half of the year will be good. So there's your upside if you continue to hold shares of Salesforce, but there's your big risk if they continue to miss the subsequent quarters. Well, I tell you what, Wall Street's not going to like that. Here's that $9.133 billion worth of revenue. Again, that was 10.7 or nearly 11% growth over last year, where you did about $8.3 billion. Big gross margins on this software business, just $2.2 billion in costs, leaving you about $7 billion on the $9.1 billion in terms of money you can spend on your operating expenses. Now, the problem we've had with Salesforce in the past, and this is before activists kind of got involved in this one, and before this company kind of cleaned up their act, is they continue to outspend on research and development, sales and marketing, and general administrative. But we really see over the last year, look at this, folks, on higher revenue, we have lower operating expenses from 5.7 all the way down to 5.3. So a lot of this revenue increase, a lot of this gross profit is going to flow down to your income from operations. Look at this, just $412 million. And I say just $412 million because this is a $260 billion company. Now they're printing over $1.7 billion to the operating side. We love to see that. You flow down to a net income number, paints a similar story, just fractionally profitable a year ago. Now all the way up to $1.5 billion. And again, this is not like Google or Amazon revenue. This is off of less than $10 billion in revenue. They're printing $1.5 billion to that net income side. That is very, very strong. Also strong is the balance sheet. Got a boatload of cash. We'll see in cash flows they've added to it more recently. Got a little bit of debt, but my guess is that's not costing them a whole lot. So we talked about that net income number. You're pulling down a giant $1.5 billion compared to just $200 million last year. You're adding back in depreciation, adding back in stock-based compensation, some other stuff as well. Here's your net cash provided by your operating activities from 4.5 up to $6.3 billion. I'll remind, and this is for 3 months. I'll remind you, again, this is a software company. This is the kind of stuff you typically see. $9.1 billion worth of revenue, operating cash flows of $6.3 billion. Boom. Now, they don't have a lot of uses for their cash. They didn't make a transformative acquisition. More recently, this company has in the past done that. In fact, that's kind of how they've rolled up the business. So that could be in play in subsequent quarters. That's always the wild card with Salesforce, right? Is these revenues are where they're at based on the core business, but Mark Benioff could unload a clip on some company and then add more revenue in that sense. And so that always could be down the pike. And certainly the way they're operating the business more profitably now, well, they certainly could pay for an acquisition, and that's something that could come. So what they're doing with their cash flow is they're rebuying the stock. What you have to keep in mind, though, is the stock-based compensation up here for employees was $750. And so on this repurchase of $2.1 billion, you just have to factor that in. It's not like other tech companies like Google and Apple, which are buying back well in excess of the stock-based compensation they're awarding. They've recently started paying a dividend as well. You see that. But overall, they added about $1.5 billion worth of cash. And again, I think one way this company could generate more revenue in the future, re-accelerate growth, is through some kind of acquisition. And that's obviously something that could come down the road. Now, the company still looking great technically. Here is a 20-year chart of Salesforce, and you are seeing it's in one of these beautiful channels that we constantly look at. In fact, this one's actually traded more towards the top half of the, you actually rarely see this, traded actually more often than not in the top half of the channel. In some cases, you can almost say that's the channel. We will get basically every single candle we possibly can. It's still looking okay. There will be some questions on whether you made a high back here in October and you've now just maybe made a lower high, or at least maybe a double topping formation. It could be potentially, we're seeing this actually with a fair amount of stocks, particularly in mega cap tech land, is maybe you start going sideways on a stock like this, at least for a short period of time. Pullbacks to the area where they're at, wouldn't blame anyone for wanting to jump in at these levels. It's certainly not the worst level, but you have completely lost momentum. There should be further support for shares closer to about 195. Certainly anybody with an existing position could maybe be a little bit more judicious. Wait for those areas. South of 200 would be absolutely amazing. It'd be putting you at the bottom of this channel, and you're probably setting yourself up for upside potential Q3 and Q4, and you're pricing in maybe some margin for error there if the company comes up a little bit short. That was Salesforce.com. We're not seeing AI translate into big revenue for these software companies yet. And the great question is, will it actually do that at some point? We assume it will, but in the meantime, Salesforce has got a great business. They've certainly turned things around financially, and as this one makes a U-turn, it certainly is on the radar of a stock potentially to buy. Hopefully you guys enjoyed today's video. Be back later this week. Good luck with your investments.